Hello and welcome to the CotMasterFX Weekly COT Review for the week ending the 25th of July 2026. Each week, the CotMasterFX Analysis Suites automatically import the latest commitment of trader reports, including both the legacy and the traders in financial futures reports. They then identify where institutional positioning is creating high-quality trading opportunities for the coming trading week. If you would like to learn more about the analytical framework and the specialized tools used throughout this publication, dedicated overview videos are available on this channel. Moving to the weekly analysis, all 28 major FX pairs are divided into 4 regions and reviewed individually. The analysis is then displayed in an easy-to-follow and color-coded table on your TradingView desktop. This week's institutional analysis reveals a clear shift in currency preference rather than broad market participation. The dominant theme emerging across the market is institutional weakness in the Japanese yen, resulting in several higher quality opportunities across selected yen cross pairs. Outside the yen, institutional conviction remains considerably more selective. Several markets continue to develop, however, broad participation and sector agreement remain incomplete, reinforcing the need for patience and disciplined market selection. Region 1 is dominated by Japanese yen weakness. Both the Aussie yen and Swiss yen demonstrate strong long institutional bias, indicating institutions continue to favor the Australian dollar and Swiss franc over the yen. While other markets within the region remain balanced or continue to develop, institutional conviction is clearly concentrated within these stronger yen cross opportunities rather than broadly across the sector. At this stage, the region continues to favor quality over quantity, with only a small number of pairs demonstrating conditions suitable for closer analysis to fully uncover the highest quality trading opportunities. Our next region presents a more cautious institutional picture. Although several euro markets are beginning to attract institutional interest, sector participation and directional agreement remain incomplete across much of the region. Institutional conviction is clearly improving in some markets, however, patience remains appropriate until stronger confirmation develops. Several markets continue to develop directional bias, however, institutional participation remains mixed and sector agreement has yet to produce the level of conviction observed elsewhere in this week's analysis. This remains a region where institutions appear interested, but further confirmation is still required before higher confidence opportunities emerge. Region 3 reinforces the broader market theme identified this week. Institutional weakness in the Japanese yen continues to generate strong long directional bias, with pound yen representing one of the highest quality opportunities currently identified by Market Radar. While several counter-trend opportunities remain visible, institutional conviction clearly favors only a small number of higher quality candidates for further analysis. As always, please refer to your flow indicator to better understand the strength and conviction of the pair, plus ensure you locate any key levels on your price chart prior to looking for entry opportunities. Our final region once again supports the prevailing institutional theme. Multiple yen cross opportunities continue to benefit from persistent institutional selling pressure against the Japanese yen, while several non-yen markets remain characterized by mixed participation and limited sector agreement. Institutional conviction remains concentrated rather than widespread, encouraging traders to focus their attention only on those markets demonstrating broad institutional support. In summary, broad institutional weakness in the Japanese yen continues to dominate this week's analysis, while conviction across most other currencies remains selective rather than across the entire market. This week's commitment of traders' legacy and TFF reports continue to demonstrate that institutional conviction remains concentrated within a relatively small number of markets rather than being broadly distributed across the currency complex. Broad institutional weakness in the Japanese yen continues to dominate this week's analysis, while conviction across most other currencies remains selective and noncommittal. This reinforces one of the central principles behind the CotMasterFX methodology. Successful trading begins by identifying where institutions are committing capital. While avoiding markets where conviction remains weak, participation is limited, or directional agreement has yet to develop. Market Radar is designed to rapidly analyze all 28 major Forex pairs and identify where institutional conviction is strongest. While this provides an efficient overview of the market, it represents only the first stage of the CotMasterFX analysis process. Before considering any trading opportunity, traders should review their preferred CotMaster suite to understand the institutional sector participation, the strength of accumulation or distribution, and any developing trends behind the highlighted pair. Only then should the opportunity be assessed using your own entry methodology and risk management plan. This week's institutional spotlight was selected after demonstrating a strong combination of institutional conviction, participation, and directional agreement identified by Market Radar. To better understand the institutional story developing behind this opportunity, let's take a closer look using one of the specialized CotMasterFX analytical suites. This week's risk review highlights a market where institutional participation, conviction, or directional agreement remains insufficient to justify higher confidence and is therefore identified by Market Radar as a market to avoid. Professional trading is just as much about avoiding lower quality opportunities as it is for identifying stronger ones. This brings to a close this week's market analysis and our selected spotlight opportunity and risk reviews. It's important to remember that institutions cannot read the future and are sometimes wrong in their positioning bias. However, as market makers, they are without doubt among the most skilled and resourced traders in the currency market. Therefore, uncovering what they do and when allows retail traders the greatest opportunity to follow them and not simply become their liquidity. Successful trading is not about achieving a perfect win rate. Financial markets will always involve uncertainty, and no methodology can eliminate risk. Our objective is simply to improve the quality of every trading decision by understanding institutional positioning and aligning ourselves with the broader forces influencing market direction. As noted earlier, institutions will not always be right, and even with greater understanding of institutional positioning and regardless of what entry strategy you use, markets will always be uncertain. However, understanding what they are doing provides valuable insight that most retail traders never see and allows them to be positioned in line with institutional positioning. Thank you for joining us for this week's CotMasterFX Institutional Market Briefing. We look forward to welcoming you again next week as we continue decoding institutional positioning across the global Forex markets. Until next week, thank you for watching and trade well.